G'day traders, I'm Greg McKenna. Welcome to Markets Morning. It's the 23rd of October 2018. I'm in a hotel room in Sydney. I'm down here covering the Cybos conference with Business Insider, the research arm that I write for, tech, fintech, all that kind of stuff, all the exciting stuff that's going on in the world, which then feeds back into what I talk about here and all my trading stuff. So it's a nice little combo. Anyway, yesterday we had a massive rally in Chinese stocks, but for the second day in a row, it failed to get any resonance with Western markets. Well, at least by the close anyway. The DAX opened higher. The Australian market didn't really do much yesterday, weighed down by the banks and I think those poor auction results. But we had the S&P 500 futures in our time zone at one stage at 27.49. They were at 27.72 as I left home to drive to Sydney, and they're back down at sort of 27.55 after a reversal. The physical market opened at 27.73, climbed up to 27.78, and then fell. And that's what we saw in Europe as well, with the DAX lower, not by too much, just by 0.26. The CAC was down 0.6. The FTSE MIB were down 0.6. But part of what knocked that back, part of what took away any resonance from China's goosing of its own market was the Italy and Brexit news that's floating around. The Italians have essentially said, quite rightly in many respects, that they're happy with their budget and they're going to push through with their budget. They've expressly said they're not trying to leave Europe, they're not trying to leave the EU, they're not trying to leave the Euro, but Brussels and Rome are in a bit of a battle here. That, with Brexit news, 95% of the deal's done according to Theresa May, yet the 1%, the 5%, whatever it happens to be of the Irish border is still a sticking point. So you might as well be nowhere until you can get Ireland fixed. Irish foreign minister said last night, it's a deal breaker again. You've got the DUP from Northern Ireland causing ructions. You've got Theresa May's own Tory colleagues causing ructions. If Mrs May manages to get a deal done, she will be a phenomenal politician. So sterling broke lower. It's down at sort of 129. Sort of 60, 70, 129.20 support. If that breaks, we're talking about 126.60. Euro's back at 114.60. Got up to 115.50 at one point last night, so it's a bit of a reversal. Aussie dollar 2 is under pressure. It's back down at 70.80. Had a mental blank then, had to look at my screen. The Kiwi, it lost about 0.5. Kiwi lost about 0.6. Canadian dollar managed to hold. Now, I want to talk about the Canadian dollar. Canadian dollar and Singapore dollar have not broken, so what we're seeing at the moment is a lot of idiosyncratic moves. Anyway, let's dive straight into charts. We're going to start with the China A, and then we're going to move back through other stocks, then currencies, then commodities, and then a quick look at Bitcoin, which at one point was down 2%. Big moves, but still pretty much in a range. Right, this is the China A50. What I've done here is show you the channel that I've got it in on my Saturday chart scan. And what we've got is we've got previous support is now resistance. And this 10,600, give or take, has been a very, very solid point of resistance for 6 months now. You can see it here. So it's very Bitcoin-esque, this market when you look at it, isn't it? So you can see that there is some chance, but you have to get back up and through these levels here before I'm saying probably 12,000 is the level that I'd want to see it close on a weekly basis before I'd get too excited about it. But even there, you can see that it closed off its highs. And now, if you have a look at what the impact was on US markets, just quickly. So I know this is a messy chart. Have a look at Markets Morning for a cleaner chart. But what you've got here is you've got this trend. So we had that trend break. Then we had that trend break, then we've had this trend break. So we've got 3 trend lines broken. Now, you know what I think about trend lines? Then we've had an inability to break back into the trend line. That's a warning straight away, followed by lower low, lower low, lower low. 3 days of lower lows. And look at this awful looking candle here. The bears won that day, didn't they? By a mile. So we've got the downtrend re-intensifying in many ways. And I guess what I'm going to say is that the 27.45, 49 region. Yesterday's low was around 49. That low there is about 45. Pardon me. On that bar. So if it gets down through 27.45, then I'm looking at 27.12, which is that low there. And the trend line comes in about 27.15. So let's call it 27.10.15. If that breaks, all heck breaks loose. I'm going to expect that it holds for the moment, but if you're an Elliott wave kind of dude, and I'm not, so, you know, all this A, B, C, X, Y, Z, all that kind of stuff's a bit lost on me. But if you just go 1, 2, 3, then if you go through there, then you're most likely, let's just give a projection. This is going to get seriously messy though, so bear with me one sec. So what do we got? What's that? That's 70 points. So take 70 points off the low of, let me just get rid of that because it's very messy. Take 70 points off the low and you've got about 26.40, which is there. Which fits quite nicely with that. Similar story for the Dow Jones. You know, 1, 2, 3. If the low breaks, Nasdaq was higher though because people were buying the fangs. Still though, you know, that's not bullish engulfing. It's a lower low first before the buying came in. So keep an eye on that. If the fangs continue to rally, they can hold the market up in many ways. Here at home, awful day yesterday, really. But we're still trapped between, you know, that's an indecisive candle. We haven't been able to close above the 38.2% retracement level. I'd want to see a close above 59.19, preferably a close above 59.33, 37, probably somewhere like that, to get me excited about that. This is a warning. But it's working through this oversold nature. Remember, there's two types of consolidations. One is a price consolidation, one is a time consolidation. What we've already had is our price consolidation. So when I'm talking about the garden variety 38.2% retracement level, that's just a price consolidation. That's what we see all the time. Think about what a 38.2% retracement level in Sydney and Melbourne house prices mean. Add a bit of inflation and it probably means 20% downturn is where they both kind of finish up. And that would just be a garden variety retracement. Wouldn't be anything terrible. It might feel terrible if you bought at the high. Might feel terrible if you were just about to sell your house in 1 mile and maybe think about moving to Newcastle and now you got to wait. But still, these are just garden variety. So now we've had the price consolidation. It's a question of what we do in time. And that's the same for a lot of markets. So at the moment, that's the key for me. It looks like it's probably going to go lower along with others. I'll do the DAX while I'm here. You can see, you know, there's one of the things I noticed when I did my screen on the weekend was, unlike 3 weeks ago or 2 weeks ago, global stocks weren't that correlated. Like, obviously they were, but not as strongly correlated as they are now, nor were they as strongly correlated with moves in the CNH. Now, of course, the fact that they've ignored China's moves for the last couple of days suggests that we are marching to the beat of our own drum. And in Markets Morning, the written piece today, I've talked about the divergence between earnings and profits. Earnings are missing. And that's starting to trouble people. It's easy to juice your balance sheet and your accounting so that you can hit hit profits, but sales is what I'm talking about. Sales are missing. So the ability to generate profits later as sales miss is threatened. So have a look at that. I've got a couple of charts in there right at the top after the elevator bit with, you know, that I start off with every day. But anyway, none of these markets are terminal. None of these markets are uber bearish unless we see the lows go. So that's what I'm looking for. You could draw a little trend line there too. Two touch. Right, let's have a look at some foreign exchange. Yeah, we'll start with sterling because sterling fell out of bed last night. So what have we got? We've had this move, 95% done yet still down. What's that all about? Well, it's about uncertainty. You know, the UK households are reporting that they're least confident about their finances in about 5 months. I've mentioned that in Markets Morning. Don't forget, the written piece of Markets Morning and this are complementary. If you're not trading every day, the written piece is very good. But if you are trading every day, what I write in Markets Morning fits neatly with what we do here. Pardon me, anyway. So I've got a break. 129.20, which is there, is the next level for me to watch. If we break down through there, so what I'd argue is that maybe this is just a range, but if 129.20 breaks, and I'm looking for 126.60, which bypasses a couple of Fibbo levels, I know, but that's what I'd be looking for. So if that's 129.20, and that is what is that? That's 132.50. So that's like three big figures. So yeah, that's about right. That's about 126.60 thereabouts. Rough maths. Year seven maths, not the kind of maths we'd normally do here. If you have a look for the euro, then the euro's down as well. So you can't really see much of the euro on the dailies, other than you'd probably argue based on that. We've still got this box. We've got a broader box, a 113, 118.50 box. We had a 115.20, 116.20 box for a little time. That's broken. 114.30 is the key to watch, as I showed yesterday in the weekly. It's about where the trend line comes in, that goes back quite a ways. If 114.30 breaks, then we get a run lower to 112.80 to 113. I'm increasingly of the view that we are, so if I draw that trend line across there, that we are going to see a move back towards 113. So, but obviously we've got to get down and through 114.30 first. It's good to have a bounce off 114.30 to 115.50 to give power to the pulse. If 114.30 does go, it may not. I'm going to respect it unless or until it goes. In terms of dollar yen, the really interesting thing about the US dollar, and one of the things I've talked about in Markets Morning, was that even though stocks were down, the US dollar was up against the yen, which I find a most curious move, a really interesting one. I've said that the US dollar hasn't broken out yet, but gee whiz, it's trying in dollar yen terms. So we'll keep an eye on that. For me, it's CAD and Singapore dollar that we'll talk about. So 112 sort of 80 is the level that I'm looking for it to push higher again, and then we get into this blue resistance zone. But it's certainly got upside, and you can see that trend line as a good level of support. In terms of the Aussie dollar, the weeklies look terrible. Let me just get rid of all that messiness there. Okay, let's just talk about the 4 hours for a sec. So, we've had a move. It's been ratcheting down, ratcheting down, ratcheting down. The last few hours, we've got the medium term, which is the 15 and the 30, turning negative. I'm going to get rid of that so I can then go back to the daily without so much mess. And you can see in the daily, if I just fix that up a bit, draw it down through there. Remembering that was a Federal Reserve Day. What have we got? It does look like it's going to head back down towards 70.40. Now, again, like stocks, I'm not going to get too bearish unless 70.40 goes, although I do think 70.40 or thereabouts will trade. If 70.40 trades, and you've got that 69.94 target I've had in for a long time, and then if I look at a Fibo projection of the move that we've had recently, then I'm looking at about 100 points off 70.40. So around 69.40 to 69.50 is the target. But it does look like it's rolling over. If it does break 70.40, it will build some momentum. Now you might say, oh, but all the specs along, yes, they are. But that's the CFTC specs. They run at a different, the CTAs run on a different basis to most traders. And so what a break of 70.40 would do would empower people who aren't position limited in the way the CTAs could be into going short, even if it's just for 20 or 50 points. But anyway, that's the story there. Dollar CAD. I'll go dollar CAD, dollar Sing, then the Kiwi. So this is the thing. Dollar CAD, the CAD held ground. Aussie lost 0.5%, Kiwi lost 0.6%. Sterling lost about 0.7, I think. Euro about 0.5%, something like that. Dollar CAD was roughly flat. Now, what does that tell me? Well, obviously, we've got the Bank of Canada this week. You look at that data and you look at where home sales, the data from Friday, and you look at the home sales, those kind of things. I kind of wonder, is Governor Pollers actually going to hike rates? But clearly, what Forex traders are doing in respecting this, now I'm melding 14 and a half minutes, I better get moving on. We're melding fundamentals and technicals, but if you read Shabaka's book, I hadn't read it till recently, it fits really nicely about the way that I trade with fundamentals and technicals. Anyway, you've got to get up and through that level there to kick on, which is the recent high, 130, 130. You get up through 130, 130, 35, call it 35, then you're looking for another 100 points, and that level there, which is 132.25, roughly 100 points. So, but you've got to get up and through 131, 30, 35. That's about 40 points away. Keep an eye on that. I don't think the US dollar is properly broken unless dollar CAD can go. And similar for dollar Sing. Dollar Sing's been in a nice uptrend. This is the the move. So it's been in a very nice uptrend, and it's still going higher, but it stalled a little bit. And so I'd like to see dollar Sing up and through. If I can pick that fractal up. Sorry, folks. 138.20. If you can get up and through 138.20 and euros at 114.30 and dollar CAD's up through that 131.30 and Aussies at 70.40, then we're going to be on the cusp of a big break for the US dollar. Of course, we've got durable goods and GDP this week. That may confirm or deny. Now, the Kiwis break is looking like a false one. Obviously, that line has moved and is in the wrong spot. Let me just fix that one up. What do we got? You could probably draw it there if you wanted. That's not the original line. The original line obviously was down here. This is one of the people. A lot of people have trouble with trend lines in the sense that they disavow them because you move them around, which is one reason why some of my charts look really messy, as you'll see with WTI in a sec. Anyway, if Kiwi takes out last Friday's low, which is 65.22, then it's going back to 64.40. And if 64.40 gives way, then we're talking about 61 cents. Let's get on to commodities. Gold, still trapped. It tried to rally yesterday, did a good job of it at one point, but came back. It's still trapped between the 38.2 and the 12.34. Sorry, the 1234, which is 50%. A break higher will really get a wriggle on. You probably need stocks to fall, and that depends on the US dollar. So gold is just trapped in that range at the moment. I could see it pull back to maybe 12.10 or something like that. And quite honestly, above sort of 12.90.93, it's still heading higher. Copper had an interesting night last night. You can hardly see because I've got. Let me just get rid of that for you. I think we all know it's in a range. That's a long-legged, awful candle. 4-cent, 5-cent range last night for HGC, and then it closed near the lows. So we'll keep an eye on that. What's China going to do? Well, it's clear with the tax cuts and that have been announced, and with what President Xi said about supporting private equity, private sector, I should say, China's got a bit of a wriggle on, or at least expectations are, but they've got to deliver on that, and we know that the economy's slowing. The question is the financialization of copper going to be outweighed, that is, people are bearish about global growth, going to be outweighed by things like, iron ore rallying and China trying to get its economy higher. Now, we've had 3 days of stability for the price of oil. I've got a bearish outlook, but I can see a potential move of $1 to $2 higher if we get up and through. So it's about $1 up and $1 down. So we're at 69.54. If we break 70.50, then I can see another $1 higher, but it's really got to get up and through sort of 71. Where are we? We're in the right part of the curve there. About 72 to 72.50. You can see the medium-term trend has turned south. Equally, down at 68.50, then you've got the start of the run towards 64, those kind of moves. 78.50 is still the big level for Brent. It's managing to hold above it. 79.90. They both managed to rally, both Brent and WTI last night, even though Khalid Al-Falih, I should say, said on behalf of the Saudis and speaking to the Russians that there's no chance of an oil embargo as in the 1970s. But this Khashoggi thing is still going through. The stories that the Saudis have been telling stretch credulity. The Turks, I don't mean to laugh, it's an awful thing, but so's the war in Yemen, but no one wants to talk about that anyway. Stop editorializing, Greg. 8.5 minutes, I'll get my skates on. The story is, of course, that the Turks have got footage of a fake Khashoggi walking around. So this is clearly premeditated, and we haven't heard the last of it, particularly from the Americans. A break of 78.50. What's that fractal there? 78.60, call it 78.50, which is what I've called it for ages, is the number that opens up the potential test. But the press is trying to stir the pot, folks. Suddenly I'm reading about the Nigerian election, which is in February next year, and the Libyan election, which is in December this year, as points of pain for oil markets, and only one story about Iraq's production going through the roof. So anyway, what have we got? Bitcoin, not much there. Break it down to the 4 hours or the 1 hours and you get a bit of volatility, but even there, it's still very, very messy. Not for the faint-hearted, Bitcoin, even if you bring it in to smaller time frames. So I pretty much said what I needed to say yesterday. While there's somebody at below 6,000, while above 56.50, it's potentially building for a pop, but otherwise it's just in a range. Righto, that's it from me. It's another quiet day on the data front. We've got German PPI. We've got 3 RBA speakers at different conferences, but I'm not sure any of it is going to be relevant. We've also got Andrew Haldane speaking tonight from the Bank of England. We've got Neil Kashkari from the Fed. They're both interesting. Anyway, 20 minutes, I better go. Bye for now.